Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at a quick trade review here in GBPUSD as one of the pairs I traded within the week, because I also traded the gold pair, I also traded the Euro USD, all this in reference also to the narrative we were seeing in the dollar index. So this is GBPUSD from the daily time frame. So what we can see here in GBPUSD, from the forecast, we saw how price traded from this bullish fair value gap and gave us this bullish engulfing candle. And we looked at how Friday traded to the downside and faced rejection at this level. And we had this bullish impulse to the upside, though what we can see here is a bearish colored candle. So during the forecast, I told us to expect the possibility that we might see price trade higher to seek the buy side liquidity, because here we have a daily bearish fair value gap within the weekly bearish fair value gap. And from that zone, we can begin to look forward to bearish model, so we can trade bearish to the downside, because we established the fact that the overall direction, or where we are expecting to see volume trade to, is to the downside. But what we can see happen on Monday is that Monday gave us a bearish movement. And what I saw was the fact that volume here close to the downside, failing to close above the volume of this candle. And that was when I began to look at the possibility that the bearish movement has begun. And then we're going to see bearish movement of price to the downside. And I think the first bearish setup I traded, I shared that in the free Telegram community. And what we can then see is the delivery that price gave us what? Bearish movement to the downside. So actually today being Friday, I shared a setup in the free Telegram community where I was expecting Friday to give us the possibility of a bullish movement. And basically what I was looking forward to see was the possibility that Friday was just going to print a reversal, since what we can see here is bearish movement of price to the downside. And I did not pay attention to the fact that here we had this bullish fair value gap, and then we had a strong bearish movement to the downside. And what we can see here is that Thursday traded bullish and then closed bearish to the downside. So it means that there was existing the possibility that the bullish fair value gap was going to serve as an inversion fair value gap. So let's use the Fib tool to look at that. So from the low to the high of that candle, so from the low of this to the high of this candle, what we can see is the fact here that Thursday closed below the consequent encroachment of this bullish fair value gap, which holds the possibility to act as an inversion fair value gap for the possible bearish continuation. So today being Friday, since we saw bearish movements, Thursday gave this bullish movement, but then we had bearish movement. So I was expecting the possibility that Friday may just give us a bullish close for the week. So that was why I was looking to the bullish possibility, because also we had Thursday candle swept Wednesday low and then closed above that. So I was expecting the possibility that we might see bullish movements. So that was why the setup I shared was looking more to the bullish side than the bearish side. But I was supposed then to look at the possibility that London was going to trade bearish. Then New York might be the session that may give us the bullish setup. But unfortunately, we took the bullish side and then price took us out of that trade. So I'm really sorry about that. So this is the narrative from the daily time frame. So we're going to look at the 1 hour time frame, where clearly now the trade execution or the setups annotations are there, so that you can look at the particular setups I traded within the week. So this was what happened then. I told us we're expecting to see the possibility that price may trade bullish to the zone, taking out this buy side, and then we'll begin to frame our bearish narrative to the downside. But what happened on Monday was I saw how Monday traded back into this rejection block level. This was the first mitigation. Price traded to the downside, back to this rejection. Price again went back to this rejection block, mitigated, and then fell to the downside. Price pushed to the upside but failed to continue bullish and went down. What we can see is that the bullish engulfing candle here was violated to the downside. So that gave us a change in state of delivery. I shared this setup in the free Telegram community, because price also further went to the downside and also took this other bullish engulfing candle, took that out, volume traded and closed below that. So what we can see is the fact that we have bearish rejection to the downside here. So I expected to see that we could see the possibility that this may give us a pullback. And considering the sessions, when we want to trade, we want to actually catch our move above the Asia session. I'm not going to go deep into talking about the sessions because I've handled that in the mentorship program. And also there is a free PDF in the free Telegram community that I also explained that. So you can get that there. So what I saw then is that we had the Asia session here, and we had that change in state of delivery with the fact that that the direction we're expecting to see or the perspective for the week is bearish. So I decided to just go on the bearish move from this. So we had that change in state of delivery, violation of this bullish engulfing and this other bullish engulfing. So I marked my level, which is basically the QML level. And that was also a level from the 4-hour time frame, a rejection level from the 4-hour time frame. And clearly you can see here we have the Asia session. So it's to sell above the Asia session. The level was marked, and clearly you can see price pullback, and then we had that movement of price to the downside, seeking these relatively equal lows, because I was targeting to see price will seek these lows and in extension this other low. Before then we could start looking at these lows resting here and the extended bearish movements. So the fact that we're expecting a bearish week does not mean my first trade setup I would get that and then just target to see price just straight to the downside. We didn't decide in the market, so we have to be conservative and then target the next draw on liquidity or the next probable sponsorship zone. So what we can see was the delivery down here on Tuesday. So this was the first execution. So what happened on Wednesday was this. So on Wednesday, I did not share this setup on the free Telegram community. So since we're expecting bearish perspective, and why I did not share this was because looking at structure, the structure is quite poor here, because those in the free Telegram community, or you guys in the free Telegram community, might be so confused and be like, where's the structure to this? Why is it saying sell from here? So what I looked forward to was to see how price again, since we are bearish, this is Asia session. Where is the next probable zone? I had these two zones here. We have this rejection level here. And then the most recent bearish order block is this. So this is Asia session, expecting to see price then return to take out the Asia session high, and then we continue bearish. So I had this level because this is an unmitigated level, and then in extension this. So that was why my stop loss was not just above this level, but above this level, because price may come here and then trade to the downside. So this was the entry, stop loss here, and then we can see how price traded, because the next drawn liquidity is this low, in extension, this low, before I'll start targeting this and this other low here. So what we can see is that price pull back, and then we had the bearish movement to the downside. So that was Wednesday's setup. So what we can then see was price gave a strong bearishness to the downside. So I wasn't in this position. So on Thursday, I think I shared Thursday's setup, because I was looking at this sell movements on Thursday, and clearly I marked that also from the fair value gap we have here, expecting it to act as an inversion to possibly give us more bearish movements. Let's look at that from the 4-hour time frame. Yeah, so this is the 4-hour time frame, so you can see how volume traded to the downside. So I expected a pullback to the mean threshold, but then to trade that in confluence in the mean threshold, I marked this open close price. This is a key level that price may return to, and then we may have that bearish continuation to the downside. In confluence, there is a bearish fair value gap here. Wow, this is crazy. So this is it. Price took us out, but now look at price giving the bullish movement. Wow, that's trading for you guys. So back to the 1-hour time frame. So I had this entry here. So price traded actually to the downside. So I was expecting further push, but unfortunately price pulled back. So where price pulled back to was this. Let's go back to the 4-hour time frame. So in the 4-hour time frame, we have this breaker block here, which is also a rejection block. Why a breaker? This is the last sell movement before the bullish movement that took out this high, and then price traded to the downside, taking it out. A rejection block, because you can see it return mitigation went bullish. So price came back to that. So price did not hold from where I took the entry. So price came back into this breaker and then fell to the downside. So that was why we can see here price, we had a failed trade setup here. So, and I didn't break even. I allowed that to move because I wanted to see price keep falling, not violating this last bullish candle. But anyway, that was NFP, came impulsively and then traded to the breaker block from the 4-hour and then gave the bearish movements. So today being Friday, so this was a failed trade setup for me. It failed. So Friday now, what happened on Friday is this. So you can see why I said I would have actually shared us taking a bearish movement first in London session. I would have done that, but unfortunately I was looking to the bullish side. So, basically Friday, we had more of bearish movement the previous days. And today being Friday, I was expecting to see Friday would give us a bullish movement. Since from Thursday, we can see it started giving that form of a bullish reversal to the upside. So what we can see here from the 1 hour, I saw how price traded bullish. And here was the origin of this impulsive movements. So when we get to the 4-hour time frame, let's get to the 4-hour time frame, guys. What we can see in the 4-hour time frame is this. This is where we have the last buy movements before the sell movement to the downside. Since I saw price failing to possibly want to just go bearish, then we should expect it to want to go bullish. Since the mitigation here was at the breaker, then if price would trade higher, then price may trade to the bearish order block here. So I would have expected to take a bearish movement when price returned into this rejection block to go bearish to the downside to seek the Asia session low. But then I was so looking to the bullish side because of this bullish impulse to the upside. And then we had Asia session and then liquidity resting here. So I was expecting bullish reaction here to give us bullish movement to the upside. But what you can see happen here is this. Price came back to that key level marked from the 4-hour time frame, the rejection level, the rejection block level. So we can see London traded into that, taking Asia session high and then trade to the downside. So unfortunately, price took us out of this. And look at now, it's going bullish. This is crazy. So this is just a quick trade review I wanted to show you guys. Cheers and God bless you all.